Thanks very much for coming, everybody. As you just heard, my name is Patrick McKenzie. Almost everyone on the internet calls me Patio11. It's my Twitter handle and what I've been going on various message boards for, goodness, more than 25 years now, starting to feel my age. Today we're going to be talking about what is traditionally called the back office of the business, which is largely about moving money around and documenting the movements of that money. In the chat right now, there were a bunch of questions about more sort of high-level business topics, like how do you think about promotion, marketing, et cetera, et cetera. I'm very happy to talk about those during the Q&A, but I wanted to demystify some of these mechanics that are typically at larger businesses left to specialized professionals, because you are going to be handling them for yourselves. The most important bit of advice that I have to give this hour, there's actually two. I love the back office of businesses. I geek out about bank accounts. I love knowing how the ACH network works. I spend hours upon hours pouring through IRS publications every year to do my taxes even just a little bit better. And none of that is important to your business. Almost all of the value that you create in your business will be created by one of three things: writing better, exposing that writing to more people, or getting more people to pay for the writing. And you should consistently be spending much more than 90% of your time, of your emotional energy, and of your intellectual cycles on those three topics, and not the stuff that we're about to talk about for the next hour. If you consistently find yourself spending more time on taxes or talking to bookkeepers, et cetera, than about 10%, you should probably reevaluate your priorities or reevaluate your systems so that you're spending the appropriate amount of time on this. And this is going to be difficult in some moments because this stuff can be intellectually fascinating. I'm the index case for that. And because it certainly feels like work. If you don't set things up right, you could spend a week on taxes solidly, wake up every day, go to work at 9 o'clock, work like a dog until the end of your workday, come back the next day for an entire week. You would get done with your taxes and you'd feel like, whew, this was a really productive week. But nothing that you did that week did your core three tasks. It didn't write anything for your users. It didn't get your writing in front of more people, and it didn't sell more of your newsletter. And so we're going to try to give you formulas that will set you up for success so that you spend the minimum amount of time on this stuff to keep yourself legal, allow yourself to sleep well at night, and then get back to writing. So I've written about 3 million words on the internet, and the first two of them created the vast majority of the value. So I would feel negligent if I didn't tell them to you right now. Those two words are charge more. And if you remember nothing else from this presentation, remember that. Anytime that you are considering price points as an internet creator, you are probably devaluing your own work because you are capable of producing the writing. You are the expert on your topic. It seems easy to you. It isn't easy for your readers. That's why they come to you as their trusted voice on whatever it is that you do. So charge a price point that is higher than you even think you could get away with. This was the most important bit of advice that I ever got when I was starting my business and led directly to the success of it. I've repeated this to tens of thousands of engineers over the years in their salary negotiations, in pricing software, in pricing intellectual property that isn't software, such as online downloadables, ebooks, newsletters, Substacks, etc. And this advice is basically the auto win. So charge much more than you're comfortable with. If you want to discuss price points, let's do it in the Q&A. Okay, to the actual content of the presentation. Who the heck is this guy? So hi, I'm Patrick. I have run software businesses over the internet for about 15 years. Depending on how you count them, I ran about 4 businesses. It was a part-time thing from 2006 to 2010, full-time from 2010 to 2016. In 2016, I joined Stripe to help work on Atlas. I'm an internet writer just like you. I've written more than 3 million words on the internet. For those of you who don't have this memorized, the Harry Potter series is about 1,050,000. So I have walked the walk a little bit. I had a newsletter at one point. It is not currently active, but I hope that to change next week. I had about 18,000 subscribers at the peak, and I've got plus or minus 100,000 Twitter followers. I don't say this to brag. I'm a very small fish in a very big sea that is the internet, but I just want to say that, like, I know the terror that it is to wake up in the morning and stare at a blank page. And I know what drives this business forward and what it doesn't. And when we talk about the back offices of businesses, I love this stuff. more than is healthy. I've helped over several thousand businesses, is the number we quote publicly. I've helped more than several thousand businesses incorporate either as a C Corp or an LLC, which we'll talk about later. I understand the back office pretty thoroughly. Due to my experience here, I would like to think that some of my own experiences might be applicable to other internet businesses, which was a very carefully chosen sentence. Why? The thing I am not a lawyer. I am not an accountant. I'm not your lawyer. I'm not your accountant. Nothing that I tell you should be considered advice. The actual lawyers tell me that if I say the word you in a sentence, that tends to be have the risk of being considered advice. So I will attempt not to address you in any of my sentences for the rest of this presentation. I'm going to be addressing a younger version of me, trying to have that younger version of me, whose story I'm actually allowed to tell, not make the mistakes that I actually did over the last 15 years. If you have questions which are specific to your situation, you should consult a properly qualified professional who is licensed in your jurisdiction. We cool on this? Thank you. Please don't get me in trouble with the internets by quoting me and saying Patio 11 advised me to do this. Please don't get me in trouble with my bosses or lawyers for doing that. Cool. Your business is going to evolve over the years as you go from where you are right now. And I'm addressing most of my comments to people who are perhaps writing casually, perhaps writing semi-professionally on the internet, but not yet making a lot of money. And there are going to be some sort of phase transitions as you go through this. And here are the big phase transitions that I went through in my journey. The business tends to feel very different when it is making no money versus when it is making about $1,000 a month. At about $1,000 a month, it's not nearly enough to quit the day job, but you start to spend a material amount of your time on business administration. It's enough money to actually feel in your life. For me, that was my rent check every month. And you start to see like glimmers of, wait, there could actually be a future in this. And then at about $10,000 a month, you probably have enough to quit your day job and make a pretty good go of it. And the rest of the world starts looking at you and says, that thing you have, that looks a little less like a side hustle. That looks a little less like running a bake sale. That looks a little more like a business. You should probably be a responsible business and do things like making sure your books are ready for tax season and keeping things in your own name, getting insurance, et cetera, et cetera. And then at about $100,000 a month, by this point, you will be a real business in every possible sense of the word. You will likely have employees. Your relationship with those employees is going to dominate your time spent on the back office of the business, et cetera, et cetera. I was at the cusp of this when I sold my businesses and went off to do other things, currently the Stripe adventure. The advice that I give you with regards to particular topics is going to be contextualized along this sort of spectrum. Oh, shoot, I said advice. Sorry. The things I would tell a younger me with regards to these topics is going to be contextualized along this spectrum so that the younger me would understand which are appropriate investments of effort if I'm early in the career versus which are best saved for later chapters. Let's talk about forming a business. There are, broadly speaking, three common organizational forms for internet businesses. And by the way, this part of the presentation is going to be ridiculously US-centric. Come back in about 5 to 10 minutes if you're not located in the United States. The two most common for people that are, broadly speaking, internet creators are going to be sole proprietorships. That's going to be most common by a commanding margin, and then LLCs, limited liability companies. Sole proprietorships are what you default to as soon as you try to do something with the goal of making money. You don't have to file a form anywhere. The first acknowledgement that that is a thing in the world will probably happen on your taxes next year. But as soon as you form that intent in your mind, boom, you are a sole proprietorship. So they're very easy to start. A sole proprietorship is you just operating as a business. The benefits of a sole proprietorship as an organizational form are that they're extremely easy. They're easiest to understand because, again, it's just you, but operating as a business. They have broadly simple tax forms and administration. They have minimal running costs. If you do it all yourself and pay with a sweat equity, it literally costs $0 a year to run a sole proprietorship. If you pay a tax accountant to help you file your taxes next year, it will cost you on the order of a few $100s. The downsides to a sole proprietorship are largely about liability for the debts of the business and for any legal liabilities of the business. Again, a sole proprietorship is you. When the business owes someone money, you owe someone money. If the business isn't doing well, you still owe someone money. If the business gets sued, you just got sued. If you own a house and the business got sued, your house is on the line. That is the biggest reason why people graduate from sole proprietorship to some other form of organization. The most common one that they will graduate to is a limited liability corporation. A limited liability corporation is established with your state. There's trivial paperwork to file. You can pick any state in the United States. It doesn't have to be the one that you are physically resident in or doing work from. They're relatively simple to start. These days, getting an LLC spun up is about as easy as buying a book from Amazon. You just type some stuff into a computer form, hit go. They have broadly simple tax administration and annual sort of administrivia requirements. I have an LLC in the state of Nevada. The state of Nevada requires me to do one process a year that I wouldn't have to do as a natural person, which is to file a list of officers where I say, the name of my LLC is Kalzumeus Software LLC. The officers are Patrick McKenzie. His address is the same as my address was last year. He owns 100% of the company. Click go, pay the state of Nevada a couple $100 to get them to read that, and that is the entire business administration of the LLC every year. The LLC does have limited liability. Your professional advisors would caveat that with if you do it right. But if you set things up correctly, you are more likely, if younger me set things up correctly, younger me was more likely to do it right the first time. Younger me didn't actually get into trouble about this. That means that the assets of the LLC and the activities of the LLC are firewalled within the LLC. So if you, as the owner of the LLC who works for the LLC, happens to have a house, the debts and the liabilities of the LLC should not be able, in most cases, talk to your professional advisor to come after the house. Downsides, it takes about a couple of hours to set up an LLC the first time. One day, if you're trying to teach yourself what an LLC is at the same time as you're going through the setup process. Plausibly an hour if you use Stripe Atlas, which I'll tell you a little bit about later. And there's some running cost to running an LLC. I generally ballpark it in the neighborhood of $2,000 a year. Much of that is going to be spent on your tax preparation and bookkeeping for the tax preparation. $2,000 is a bit on the high end. If you're willing to pay with sweat equity and do your own taxes and do your own bookkeeping, it's lower. It'll probably be in the hundreds of dollars of region, depending on where you live in the United States, because different states have different recurring annual costs for LLCs. For completeness, I will tell you that corporations are a thing in the world. And S corporations are a thing in the world. S corporations are not actually a form of corporation, but I don't want to get down that rabbit hole with you. The only reason someone will suggest an internet business with a single person at the helm as sort of a media operation, which describes many of your companies, will adopt a corporation, is to enable some tax gamesmanship versus an S corp. Many small business accountants will talk about this exact form of gamesmanship. I think it's largely a waste of your time. It only matters if you make a very narrow range of income between $100,000 a year and $200,000 a year, and you're willing to do some tax gamesmanship. Accountants will give this advice because a lot of doctors specifically find themselves in exactly that bracket and have no, like, a doctor has a finite number of hours to sell a year, so they have nothing that will like move their needle by $10,000 except doing tax gamesmanship. You have a very easy way to move your needle. It is, again, write more, get in front of more people, get more of them to pay you money. I think that is always a better time versus trying to do tax gamesmanship. Similar to an LLC, a corporation has limited liability. One cool thing about corporations, and this very much depends on your values, but if you remember Patrick Bateman in one of his, which was one of the roles of, I can't remember if that's the actor or the role, when he's doing the business card scene, it's like, this business card, you could shave with it. It's so amazing. Some people really like owning a corporation because they feel like they're the man now as a result of doing that. I think that's a rather silly hobby to have, but some people go to the opera every year. Some people join a golf club. Some people have a corporation in their back pocket. If that's you, you do you. I've never actually owned a corporation. LLCs have been fine. And LLCs scale to the moon. Apple in Japan is an LLC. It's amazing. Corporations are relatively expensive and complicated to do the care and feeding of every year. It's on the order of a couple $1,000s, even if you're doing it exactly right. And there's some corporate forms that you have to observe, like having board meetings, et cetera, depending on your state, which you have to get right. And if you're not a lawyer and don't have a lawyer in the room, you are highly unlikely to get right the first time. Okay, let's move on this. The younger me, going through the various stages of these businesses that I've run, would say that in the early days of my business, prior to having any money coming in, or at a trivial amount of money coming in, I'm automatically a sole proprietorship. So yay. As money starts to come in and I see a real future for this business, I would consider transitioning to an LLC. Actually, historically, I ran my businesses as a sole proprietorship for 7 years, doing let's see, revenue over the first 7 years. I think my peak was about $85,000 a year of revenue prior to actually forming the LLC. The only reason I formed the LLC was, as I mentioned earlier, I had 4 businesses. One of my businesses was going into a regulated industry, and I thought, it's possible to screw things up in a regulated industry. That might cause that business to close. I would hate that business closing to also cause me to lose everything I had built in my other businesses and my retirement account. So that is why I finally broke down and formed an LLC. These days, it's easier to form an LLC via things like Stripe Atlas. I might have done it a bit earlier. But again, ran a sole prop in the United States for 7 years, had no problems. Sole proprietorships are by far the most common business in the United States, something like 96% of all businesses. Don't quote me on that number. I didn't actually look it up, but it's astounding how many there are. And many, many successful internet businesses are run as sole proprietorships. Might not be optimal, but that is the way of the world. As you get to $100,000 a month of revenue, you're probably going to have employees and things. You're definitely a real company, but you can stay as an LLC. I would definitely not have a full-time employee as a sole proprietorship, even though one is theoretically allowed to, because full-time employees, largely wonderful people, but they are a source of risk for the business. There could be litigation around employment practices. They could have a dispute with you about payroll, et cetera, et cetera, et cetera. If in the 5th year of dealing with an employee, you have an irreconcilable difference of opinion and need to fire them, and they talk to a lawyer, you do not want your house on the line. So definitely speak to your competent professional advisor about whether you should have an LLC before you formally bring someone on as an employee. So there are many ways to form an LLC online. You can probably form one through your state directly. Stripe Atlas, the company that I worked for 3 years, does LLC formation. If you go to bit.ly/atlas-substack, you can get $250 off your LLC formation. We'll also throw in the registered agent, which is a detail that you need to worry about, but don't worry about it too much for the first year. This is good for the end of the year. Don't rush out to incorporate an LLC, don't rush out to form an LLC today. Again, form it when it is right for you, but we're standing by if you need it. And again, LLCs are an easy product to get in the market these days, almost as easy as a book from Amazon. There are many providers. I happen to think the one I work for is the best, but feel free to go with whatever works for your needs. Let's talk about the scintillating topic of bookkeeping. Said no one ever. But bookkeeping, if you do it right, is going to save you a lot of time and frustration on your taxes next year. And so I want to give you a few quick tips about bookkeeping, which will cause you to do the right thing the first time and save you a lot of money down the line. The biggest goal of bookkeeping bookkeepers would tell you that there's two. One is allowing business administration to you as the business owner to manage the business in such a way that you know how much money you're making, you know what your liabilities are, and you know what you can afford and cannot afford. That's less relevant to internet businesses because you generally have a pretty good idea of the money you're making. You see it come into the bank account basically every day. And you generally have a pretty good idea of what you owe. It's whatever is on your credit card statement, or even less than that if you're using a debit card for everything. And you know how much money you have because it is exactly the amount in the bank account. The main thing that internet businesses use bookkeeping for is it supports your tax filing next year. So we're going to work backwards from that goal. What is the tax going to look like for a sole proprietorship or an LLC? It's going to look like Schedule C, or if you want to play life in easy mode, Schedule C-easy, because the IRS are hilarious. The Schedule C actually looks a little bit intimidating, but it's really not if you zoom in on just the two parts that matter, which is part one, income, and part two, expenses. Income is really simple. It's how much money came into the business from customers. That's just the total of everything that you charged your customers via Substack. So it'll be a very easy number for you to calculate. Expenses are also relatively easy. It's how much was spent on the business specifically. The one wrinkle of the Schedule C is that you need to be able to substantiate everything that goes on the Schedule C. Substantiate is a big word that the IRS uses to mean prove. And what they mean is you need contemporaneous written or electronic records about every transaction that backs something that goes on the Schedule C. You are automatically going to have that for all of the money coming into the business because no one is paying you like cash, physical cash dollars into your pocket to buy your Substack. They're all using a credit card. It goes through Substack. Substack keeps records for you. Boom, you're done. On the expenses part, you're going to set up your life such that you capture most of the expenses automatically onto some electronic record. I'm going to tell you about how to do that in a minute. And if you don't pay an expense electronically, if you pay it in person or via cash, I have a quick thing to introduce you to. My best friend as a business owner. It is a folder with a zipper on top of it. You can buy 10 of these for like $2 on Amazon. And if I was on the Home Shopping Network, I would say it's sleek, only the finest manufactured plastic, and it smells like money. And here is why it smells like money. The other day, I took somebody out to a coffee to discuss the thing that he does. And of course, I paid for the coffee because I'm a nice business owner. I paid for it in cash. I got a receipt. The receipt is for $18 at the Café Façon. I wrote what this thing was on the date that I had the coffee. And now I'm going to put it into my magic folder and zip the folder back up again. And by this simple magic, that $18 receipt becomes $10 in my pocket at tax day because that's the marginal impact in my taxes given the rates in Japan, yada, yada, yada. I can explain the math later. But it's exactly the equivalent to putting $10 in my pocket 6 months from now. Many more than 6 months from now, 15 months from now. They didn't hire me to do math. Anyhow, that is the magic of folders. Everybody should have a folder. Folders are a specific example of the general case. You want to consistently capture all the revenue of expenses of your business and have them in one place at the end of the year. There are some details. You don't have to memorize all these details. I just want to give you some words to remember so that you can talk to them with your bookkeeper, accountant, or IRS enrolled agent next year. IRS enrolled agent, by the way, that sounds much more intimidating than it should. An IRS enrolled agent is not somebody with a gun who is going to enforce tax payment on you. An IRS enrolled agent is someone who is filed with the IRS to say, I'm not actually an accountant, but I understand taxes well enough to do them for somebody else. They registered with the IRS, and then they hold themselves out as a business in the world to do tax preparation for small businesses just like you. So, revenue, again, everything that you charge for the you charge customers in the business. Depositing your own money into the business isn't revenue. You don't pay taxes on that. Revenue includes costs that are incident to revenue, which is a sort of big accounting word to say revenue includes things that are deducted before the revenue gets to you. So for example, if I'm going to use round numbers to make the math easy for myself. $100 of Substack subscriptions in a month. The actual amount of money that is going to hit the bank account is going to be approximately $86 because Substack will take their fee of about $10. Stripe will take our fee of about $4. 100 minus 10 minus 4 is about 86. So do you have $86 of revenue? No, you do not. You had $100 of revenue and $14 of payment expenses. Why does that matter? It doesn't matter because of net impact on your taxes. You had $86 of profit, you will pay taxes on whatever whatever part of that $86 wasn't hit by other expenses. Either way. But the Substack/Stripe has an obligation in American law that if you process a certain amount of credit card transactions through us, we have to send the IRS an informational return for all the revenue that you processed during the year. And if you come to the end of the year and said, I'm going to make up larger numbers because this is where the IRS will start to care about it a lot. If we sent the IRS a form that said they processed $100,000 of transactions on us, and you told the IRS, I have $86,000 of revenue this year, the IRS is going to say, oh, I know that ain't true. I have this piece of paper from a financial company that knows how to do math that says you got at least $100,000 in this business. So my first assumption is that you are hiding $14,000 of taxable income. And the IRS will send a younger me a letter, and that letter will be absolutely freaking terrifying. And what actually happens as a result of that letter is a couple of weeks of sleepless nights, and then you get on the phone with the accountant, and the accountant gets on the phone with the IRS. Simple mistake, happens all the time, gets dealt with. You owe a little bit of money to the accountant, the IRS the IRS could end up not assessing any fees or penalties for your simple clerical error. But weeks of sleepless nights, so don't do this. Sorry, remembering a little bit of stress from being younger and dumber about this stuff. Okay, you can only deduct expenses which are necessary and customary to the business, which means that, like, many small business owners play in gray areas and less than gray areas with respect to what they deduct. Hypothetically speaking, you could deduct a PS5 for a business. There are some businesses for which a PS5 is necessary. For example, like if you are in the business of doing video game reviews and people pay money for that, and you only use the PS5 to do the reviews for the business, then that's necessary and customary for your business. I was in the software industry. It is not necessary or customary to have a PS5 to just operate in the software industry. So only deduct the things that are necessary and customary. In the actual mechanics of running an online business, you will likely have some, sorry, I'm just doing a quick time check. Good, I'm on time. You will likely have some expenses that are like, well, it's a little bit for me as a person and it's a little bit for the business. Classic example of this, your internet connection. You can't do work as an internet author without an internet connection, but presumably you also use that internet connection to do personal emails, yada, yada, yada. What you're going to do is prorate it. And that means that if I spend 16 hours a day attached to a screen, which is unfortunately kind of close to accurate, and about 8 of that is for my business and about 8 of that is for me, then the about 50% of the internet bill every month will be prorated to yours truly, the actual person, and 50% will be prorated to the business. Your bookkeeper or accountant can help you set this up. Again, have great records of what you actually spent. There are a few types of business expenses that the IRS thinks are extremely abused, and so they require you to have more substantiation than usual on. Those are business meals and entertaining, travel, I miss travel, and home offices. If you're going to deduct any of these, talk to your accountant and or read the IRS's publication for small businesses, which is impressively readable. They write it at a 5th grade reading level. It's actually kind of good, but follow the instructions that they have. And for Substack authors, The first question that my accountant asked me back in the day when I told him how low the expenses for my business was, do you read the Wall Street Journal? And I said, I've read the Wall Street Journal every day since I was 7 years old. My father read it to me because my father ran a small business, and he sort of used it as his talisman of, you can't be a serious businessman without reading the Wall Street Journal. I literally learned to read from the Wall Street Journal. Of course I read the Wall Street Journal. And he said, I don't have a receipt for the Wall Street Journal here. And I told my accountant, again, I've read the Wall Street Journal since I was 7. I've had a subscription in my own name since I graduated from college. This isn't a business expense. And he said, the Wall Street Journal is a business expense for any business in the United States. I'm like, oh, that's cool to know, because then the Wall Street Journal gets paid out of the business's pocket rather than yours, and it effectively becomes like 30 to 50% off given the impact of taxes. There are a lot of things that might not feel like they're necessarily business expenses, but that totally are. For example, like other reading that you do as research for the kind of writing that you do, like other Substacks, books that you read, et cetera, et cetera, et cetera. Talk to your accountant. There is a high likelihood that those are necessary and customary in the profession you find yourself going after. Also, talk to your accountant, but the IRS has a limited amount of time every year. They don't sweat the small stuff. And like expensing versus not expensing an $8 book is not going to cause anyone in Washington to wake up and say, I want to nail this person to the wall. Talk to your accountant. Okay, moving on. So bookkeeping and taxes throughout a younger me's growth as a online entrepreneur. In the early days, get a dedicated checking account. It doesn't necessarily have to be in the name of the business. Again, as a sole proprietorship, you are the business, but you want all the money going into and out of the business to be going out of one checking account, because it will make life much easier for your bookkeeper or accountant to reconstruct what happened later. And then it's also good for a privacy thing. Like, you know, hypothetically, think of all the things that could happen this year. You could get into a car accident, you could pay medical bills, you and your significant other could split up, there could be messiness around who is moving money in, who is moving money out, et cetera, et cetera. Do you really want to be talking about all of that with Mildred, the bookkeeping person, when you are doing your taxes for next year? No, you don't. You just want to give them one account and say, everything on this is on the business by default. I screwed up 2 times during the year and bought a latte for myself. Here they are. That is all that you need to know about my personal life, Mildred, that I had 2 lattes. Put all of the payments from Stripe/Substack into that checking account, which is a trivial setting. I'm sure it's documented in Substack. Pay for expenses for the business using either the debit card attached to that account or a credit card that you use only for the business and for nothing else. Luckily, banks give out credit cards like candy. It doesn't necessarily have to be a business credit card. Again, you are the business, just like make it for the exclusive use of the business. As you get closer to having actually making money, you're going to have to file taxes next April. The bookkeeping is going to be by the shoebox at the end of the year method. You are not going to use the shoebox. You are going to use a folder that smells like money. But this is called a shoebox in the industry because the typical entrepreneur comes in with a shoebox of receipts. They give it to their accountant and they say, I don't even know what is in there. Make some sense of this. You are going to say, I actually do know what is in there. This is all the receipts for my business this year that I didn't get an electronic copy of. Here are the electronic bank statements. I'm literally one of the most organized small business people that you are going to meet this year. And your accountant is going to say, oh, you have no idea because I have a stack of shoeboxes behind me. But what I mean by the shoebox at the end of the year method is you're not going to be doing bookkeeping on a monthly basis for yourself. You have set up a system to capture all the information contemporaneously, and you will review that information with your professional advisor next year. When you have a full-time income from running your Substack business, you are probably going to want to have the this happen on sort of a monthly basis with like a check-in for the bookkeeper, just so that you are keeping enough money to pay for quarterly taxes, et cetera, that sort of thing. There's a couple options here. I use a service called Bench. Bench is, I won't say it's expensive, but they don't need to be told to charge more. It cost me about $150 a month, which would have been prohibitive for me when I was just starting out, but makes a lot of sense at my scale, given that I've got other things going on in life. You can do your own bookkeeping in something like Xero. I would tell you, you are a much better author than you are a bookkeeper. Let somebody else do the bookkeeping for you. Just go sell more subscriptions. You can hire a freelance bookkeeper. They are available abundantly on the internet in every town in America, and they charge not all that much money because it's a great job to do when you work from home. As your business gets more sophisticated, this does get a little more complicated. You'll want things like tax structuring, retirement, have an accountant on retainer, et cetera, et cetera. You can deal with that years from now. Banking, because you got to get paid. There's only one thing you need to know about banking: dedicated accounts for the business. That's it. I use Mercury. It's at mercury.com for my LLC. They treat me great. The other option for you is to use a bank that you already bank at for your personal needs. Again, get a new account for it. You can either get a business bank account to start out or just another personal bank account to start out. And you don't need to give them any reason for wanting another personal bank account. They'll just assume that you like having bank accounts. The reason to get it at the same place that does your personal banking is because it makes transfers between your business and yourself substantially instantaneous. And that's a helpful thing when you are like early in the life of a business and don't tend to keep a lot of cash around. That is literally everything you need to know about banking. Insurance and legal stuff. Again, I'm not a lawyer, not your lawyer. This is advice to help a younger me sleep better through night on a few stressful days over 15 years. I would like to introduce you to my uncle, Uncle Warren. Warren Buffett is one of the richest people in the world. He's not actually my uncle, but I like to think that Uncle Warren is my uncle because Uncle Warren has stepped in on a couple of occasions and said, that problem that you're having, Patrick, I'm just going to make it go away. You are extremely unlikely to get sued. I was terrified beyond speaking of it the first time I did business on the internet that I was going to make somebody mad, they were going to sue me, and I was going to have my retirement account taken away from me. A fun thing about regulated industries like insurance is that they have to tell the government exactly what the cost structure of their product is. And so they will tell you, tell the government rather, how likely it is a small business is to get sued. So I went into the insurance filings for the, I think, Florida Department of Insurance for the Berkshire Hathaway subsidiary that gave me my professional insurance policy. And I figured out, insurance company, exactly how likely was I to get sued when I had your insurance policy? And here's what they told the government. 0.78% of all people that were in a similar situation to me were sued in any given year. It was a $42,000 average expense. And when I looked at those two numbers, I'm like, that was much less risky and much less catastrophic than I thought it was when I was running a business. Good to know. But if, hypothetically, you get sued, you are in for months upon months of sleepless nights. And if you have prearranged with Warren Buffett that if you get sued, Warren Buffett is just going to make that problem go away, then Warren Buffett is not going to have any sleepless nights about it, because Warren Buffett is going to go to his cast of innumerable insurance adjuster and lawyer minions and say, Patrick just got sued. Why don't you take a sip of Coca-Cola, because I own 10% of the Coca-Cola company, and then in between 1,000 other similarly situated people that you deal with today, just make that problem go away. And they will make it happen. And it will cost you about $1,000 a year. It's fantastic. So at some point, you should probably think of getting an insurance policy. The specific kind of policy you want is a blended general liability policy and either professional liability or errors and insurance. You don't have to remember that. It's going to be the exact thing that everybody tries to set you up with when you say, hey, I'm a business, I want insurance. What is the basic thing? I don't have a particular recommendation on the which provider you go through. Again, I went through Uncle Warren through one of his subsidiaries, USLI, but because insurance is crazy, they don't actually sell you insurance directly. They make you go through a broker. My broker got disbarred. It's a long story. If you Google like blogger insurance, you will find plenty of great options. The one thing that I can predict that a lawyer will tell you if you talk to a lawyer is that only lawyers talk about legal stuff and only lawyers talk to lawyers. And so if hypothetically a younger me got an email from an extremely hypothetical poorly adjusted teacher in Nebraska who said, I have a trademark on bingo cards in elementary school teaching, and you are selling bingo cards for elementary school teaching, and that just ain't right, so I'm going to sue you. And I got into a email discussion with this teacher and said, that isn't how trademarks work, et cetera, et cetera, et cetera. And then I did what I should have done and talked to a lawyer about it. And the lawyer is like, somebody said they're going to sue you. Why are you talking to them? I'm like, because that isn't how the law works, and I need you to explain to them that this isn't how the law works, so that they don't sue me. And he's like, or you could let their lawyer charge them every 6 minutes to explain to them that they have no reason to sue you and not cause yourself problems. But now everything that you said to that person who has declared an intent to sue you is something that I have to read that causes problems for me, and every 6 minutes that I spend reading either their craziness or your responses to non-professionally deal with their craziness, I have to bill you. I'm like, oh. It's like, yeah, you should have just ghosted them until a lawyer got in touch with you. And then when the lawyer got in touch with you, your only thing you should have done was forwarding it to me, and I would make it go away. And that is good advice. That isn't advice. That was advice. That was my lawyer telling me advice. That is not me telling you advice. But I predict with a high degree of certainty that whenever you talk to a lawyer, they will not say, I really want you freelancing your responses to a lawyer if they threaten to sue you. It's unlikely to happen in the legal profession. And I had an entire rap by the noted legal scholar CeeLo Green about this, but we're running short on time, so you have to hear that from me some other day. Legal issues. Early days, you're winging it. Early in the life of your business, the only thing that I would worry about is if you are in a line of work where you are likely to get what's called in California a SLAP, a strategic lawsuit against public participation. Like if you're covering government corruption or getting deep into the weeds with deep-pocketed business interests, then you might want to get liability insurance earlier rather than later. At the point where this is your full-time job, it's too cheap to lose sleep over. Just outsource the risk to Uncle Warren. When it's a business, you'll probably want to have a lawyer on retainer, just so that you can have a sleep better at night call every quarter. That is most of the prepared content for today. I'm Patty11 on Twitter. Here are my 2 email addresses. I love talking about this stuff. So I can't give you legal or accounting advice, but if you ever have questions about the administration of a small business, my inbox is open.